Well, I'll do another update on the S&P 500. What a day! What an interesting day. For those of you who have Globex, you would have seen that midway through the night, around 4 in the morning, futures, S&P futures, the ES, the mini, we were actually down about 100 points. And then we opened, I think, down 60 points. And a lot of negativity, rightly so. It just seems that the realities of the economy are starting to come back. New waves of the virus, apparently a carryover from Memorial Day. Well, what's going to happen in 2 or 3 weeks when all of this stuff that's going on in the streets starts hitting? Anyways, 2 videos ago, I did a target on the S&P 500 for year end, a crazy target, 4,000 on the S&P, 400 on the SPYs. And I said in that video, if the market fell 200 points, I guarantee you the Fed would come out and announce something. And what did you see today at 2 o'clock? The Fed came out and said, you know what, we think we'll buy some other stuff as well. We're going to buy corporate bonds in the secondary market directly. And we're not going to stop there. We're actually going to create an index now. So it's not enough for the American Sovereign Wealth Fund, which is now run by the Fed, to be buying more assets and be the biggest buyer in the bond market. It is slowly becoming the bond market. So the message is clear there. Get out of the bond market because I'm taking all yield out. And the market just took off at that point. And stayed positive into the close. After the close, it drifted up. And right now on Globex, let's see where we are. We're up another 26 points on the S&Ps. We're right at 3,100. 3,100 even. Nothing changed today. This is what I want you to pay attention to here. Nothing changed in the economy. Nothing changed on the virus front. No news, no change in the pace of infections. In fact, we're getting more negative news on that. Nothing changed in terms of the pace of bankruptcies. Nothing changed in terms of earnings projection. Nothing changed. Only the buying, only the Fed announcement. So I've been saying, with powerful interests that are motivated to see these markets go higher, don't stand in front of them. As much as it's obvious that the level of the market does not match the fundamentals, analysis here is useless. You have an extremely powerful player that only wants to see that market go up. And again, I repeat, in that video I did 2 videos ago, I said, I guarantee you if this market dropped 200 points, the Fed would come out, because that's what it does. That's its pattern. So we'll go up and up and up, and if whatever level we get to, if we pull back 200 points, 300 points from there, they'll step in again. They won't stop. They will not stop. So if you're looking at this market in terms of analysis, stop. You're never going to justify these levels on analysis. It's not going to happen. Is there going to be a second wave of the virus? I can't see why not. I can't think of a and I'm not a doctor in the least, but I did stay at a Holiday Inn Select last night. But I can't think of any valid reason why there wouldn't be. I can't make that argument. So again, the trade that I put on, because I've gotten some pushback on that it seems a little bit risky. It's a $3,500 call on the upside, financed by 2 puts at 232 on the S&P, which is 2,320 on the S&P 500. And you saw what happened today. I mean, we didn't pull back that far. We were just around the 3,000 mark, a smidge below 3,000. and the Fed felt it necessary to make an announcement to put a bottom under this market. I don't know what would take it down. The market would have to drop to 2,300 before I'd feel any pain. I don't know what would take it down to 2,300 at this point. You would have the Fed step in multiple times on the way down. Multiple times. And if that didn't work, it would not surprise me to see the Fed step in and start buying equities. That wouldn't surprise me. Maybe they'd start with preferreds and then they'd move into equities, but that wouldn't surprise me if that's what it took. So, from day to day, I don't know what's going to happen in the market. Nobody does. I just know that over a long period of time, we're going higher. And right now, the trade that I have on has December options. We're going to be higher. I can't see what takes this market down, and I can't see what keeps the Fed on the sideline. If we sell off at any significant amount where the Fed says, okay, that's gone a little more than just a small pullback, this risks turning into something else, I'm going to step in. With that backstop in play, you shorting this market is looking for an event. And we trade events, but we invest in trends. The trend is up. So you want to be invested in the trend. When the market does sell off or you see weakness, if you're experienced enough to trade those events, then you might want to trade that event. But I certainly wouldn't start loading up for bear, thinking that this is it, this is the big sell-off. It's not going to happen. The Fed will ruin your day. And from 2009 onwards, that's what the Fed did. For those of you who have been through that period of time, I can remember the market hitting bottom March 6th, that's 666 on the S&P, and then it just turned around and went straight back up. It never turned around. It just kept on going and going. There was a brief period of time for the flash crash, and then up it went. Everything was okay, and at every step along the way, every 100 points we got to on the S&P, same thing, the same thing. The market is disconnected from the fundamentals. Kept going up though. It kept going up. QE1, QE2, QE infinity, it kept going up. And here we are again with a Fed that is going beyond quantitative easing using other tools. So you have the full quantitative easing, you have extremely low rates, you have massive asset buying, you're going to have yield control at some point. So for those listening that are just, you're looking at these levels and you're saying it doesn't belong here. This is a screaming easy trade. This is a short. Don't do it. Don't do it. You will get crushed. The Fed won't let you win. The market will start to drop. You'll start to feel good, and they'll step in with something. It's easier to be long, and be long with a low cost, low risk option. And when I say that I'm selling puts on the downside, I got the Fed standing between where the market is right now and my puts. I got them stepping in multiple times along the way. It's kind of like having that big friend in the schoolyard. Have you met my friend? You got something to say to me? Talk to my friend. So if the market's going to sell off, you talking to me? Talk to my friend. The Fed will step in, and you guys can't beat him. No amount of short sellers are going to beat that guy. And that's my friend. So you'll invest in the trend, which is up. You'll trade the event if it happens, and you won't short this market because you want to keep money in your pocket. The Fed is giving you permission to get positive exposure to this market, however you get it. I get it in two ways. I get it with my REIT positions because that's primarily where I trade, is in the REIT space. And I use a derivatives overlay to get my market exposure if I want to add beta or subtract beta. I don't subtract beta with the market. I simply just add it. If I don't like the level of the market, I will lighten up some of my long positions, but I will not short this market, ever. Later this week, I'm going to put out a video explaining the process that I go through when I trade, my core position, how I use a derivatives overlay, and how I use the puts to generate income and add to my position, and when I use those puts and how I structure them. I don't actually pick one or two when I put trades on for puts. There's a row of about 15 or 20 with multiple steps in them that I take, and I wait. I don't get them all, but it's like trolling. if you've ever been fishing. Trolling means you hang lines out of the back of the boat and you go really, really slow and you hope to grab something. So I use a technique like that with the puts. Later this week, I'll put a video out showing you how I do that, and I'll give you a list of maybe about 10 or 15 names that I'm doing it on. Again, just for exposition, not recommendations. I'm just going to show you how I'm doing it, but I find that if I can use real world stuff, it just means a lot more, because you can actually follow it and you can look and check and you can see how those things work out. But again, it's not a recommendation. So later on in the week, I'll put something more complete out about how I do these things. There seems to be a demand, a hunger for more content along these lines. So I'll keep doing it until I see that nobody's watching it anymore. Then I'll say, okay, well, that was fun. Anyways, stay safe. And the safest place to be is either flat or long. Do not short. 2 o'clock today when the Fed made that announcement, I hope that was a big enough club to teach you not to short this market. You're going to get hurt. You're going to lose money. All right? That's it.